Hello and welcome to another edition of Market Briefing. I'm Martin Bakkerdax, European business editor here at the IB Times UK. Well, it's a little bit calmer today across European equity markets, and that's probably good respite from the volatility that we witnessed really in Asia and Europe yesterday in the wake, of course, of the deadlock and the political gridlock in the Italian elections. We're looking at modest gains across the board today, and it's not because we've seen any advance in the Italian political process, but really more because of some calming words from Federal Reserve Chairman Bernanke last night during testimony to U.S. lawmakers. They're not prepared to pull back on any of their stimulus measures just yet, and he actually tried to ease concerns that unwinding the trillions of dollars of securities that they've already purchased to bolster the economy probably won't stoke inflation, and they have a plan in place. He didn't feel that equities were overvalued at this point either, and actually, curiously, had some stern words for U.S. lawmakers with respect to the impending fiscal cliff. Back to Europe, though, as I say, no advance in the Italian political process. We are hearing noises of a potential merging of coalitions, perhaps between Mr. Bersani and those of Mr. Grillo. But again, we're having to watch that with interest because there's no great news to break at the moment. That said, the Italian Treasury did enter the bond market this morning in a fascinating two-part auction in which they raised about 6 billion euros in 5- and 10-year debt, right in the teeth of speculation about whether or not this economy can survive. Extraordinarily, the debt wasn't really that expensive. In some respects, it was actually cheaper than what they had seen trading in the marketplace over the last 2 or 3 days. So the Italian banks seem to have stepped up, and investors seem to be reacting a lot more rationally today than they were really only 24 hours ago. Here in the United Kingdom, we had another look at GDP for the final quarter of 2012. There was no revision to the minus 0.3% that had been measured by the Office for National Statistics a couple of weeks ago. So no great change from the investor perspective there, or indeed for the perspective of the Chancellor George Osborne. But nonetheless, some of the detail underneath was particularly telling, including a revision of the year-on-year gain for the whole of 2012. This may surprise you, but the British economy grew 0.3% more over that 12-month period than it did in 2011. It's a small bit of good news and probably very welcome for the Chancellor as he prepares his March 20 budget. Two stocks we're looking at today here in the United Kingdom are Centrica, of course, the owner of British Gas, the biggest gas and power provider across the United Kingdom. Their profits rose about 5% to 1.4 billion sterling. It may indeed spark some ire with respect to British Gas customers who are paying increasingly higher prices, of course, for their domestic energy supplies. Another stock worth taking a look at today is ITV. It's down about 1% today, but remember, that's from a 5-year high. ITV posted better than expected full-year profit for 2012. I beg your pardon. They also said they do anticipate that their advertising revenue for the first quarter of this year will be relatively solid. They paid a special dividend to their investors of about 154 million sterling. That may be indeed as part of a plan to fend off some speculation that they're being approached by private equity buyers. Adam Crozier, the CEO, said they haven't received a formal approach just yet. That doesn't mean, of course, that there haven't been talks or echoes of talks in and around the marketplace to push the stock that high. But for the moment, investors are happy with the dividend, and they're taking back some of the profit that they booked over the last 2 or 3 weeks. Check it out on the IB Times economy page, please. We'll see you tomorrow.